Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So, an interesting week. We had a very fascinating one in terms of inflation last week, the CPI inching up, the PPI inching up even more substantially. And that really puts in focus the Federal Reserve meeting this week. This will be Wednesday at 2 p.m. Eastern Time. They're expected to cut by 25 basis points. But let's not fool ourselves. Whether they cut, that's not really a key here to the market action. They're going to cut by 25 basis points. The Fed and Jerome Powell never want to surprise the market, so they always choreograph and kind of alert the markets what's going to happen ahead of time. The key is going to be what they say afterwards. What does Jerome Powell say during that press conference? Is he going to talk about how they have to be more restrictive, maybe not lower interest rates as much in 2025? Are they going to be more hawkish or dovish? And that will be the driving force for the markets this week as we inch towards the holidays. We do have other things as well. Earnings from Micron on Wednesday after the close should be very, very interesting, as again, that's another chip stock after Broadcom had that monstrous rally. But let's get into the markets here and take a look real quick at what we have. The S&P is floating up on very, very light volume here. Interesting price action, right? So again, this is basically going back to last Friday's action. And one of the things that stood out for me is this change in character that we have been seeing from the markets. And what do I mean by that? Well, when you have Broadcom, a new trillion-dollar participant in the market, essentially now it's the Magnificent Eight, you have to wonder why the S&P could not hold its gains on Friday and ended flat. And even the NASDAQ essentially ended flat as well. So there's some key differences starting to emerge. Essentially, I look at them as being breadcrumbs of what the market is going to do in the future as it starts to get ready for a change in character. All right. And again, that's something that I've really been harping on. And the charts, again, are confirming this. So here's the S&P on Friday. We could see we had the big kind of fall early and then sideways chop into the end of the day. And then here in the pre-market, we are up and we're rallying back up. The key level to watch on the spiders here on the S&P pre going into the open is going to be this level here at 607. That was the high of the market just going into the opening bell on Friday. That will be technical resistance today. Now, if we flip over to the S&P 500 here, and we go to the daily chart, you guys all remember this trend line, right? This trend line, again, going back to 2023 October, so it's over a year old. It was the support level for the markets multiple ways through. Then we broke, and now it's been resistance. So like I've said to you before, we hit my 6,100 target literally to the point on the S&P. So far, it's kind of stalled the market out. But if we do turn up, which is always a possibility when you have holiday action and light volume in the remaining 2 weeks of this month and this year, we could get up to this level. Currently, it looks to me like it's right around 61.75. So 61.75 would be this trend line right up here on the S&P 500. My point being is that upside, there's very little reward left. And I think that's why we're starting to see this change in character in the market is that you get these factors, for instance, the Buffett rule, the Buffett indicator, now at 2 standard deviations above the average, the long-term average. I mean, there are things that are just telling us the market is insanely overdone here. And at some point, the institutions are unloading. And I do think if we go back to the intraday, right, if we look at the intraday on the S&P, notice that, again, you've had a lot of days like Friday where early in the day, how many times have I in these game plans talked about how we saw selling for the first hour, which is institutional dumping, and then they step aside the rest of the day because there's just not enough liquidity for them to exit any sizable positions. But again, we've seen this over and over again going back. Here's another great example of that there. Other great examples here, etc. Going back. The only difference was on Wednesday when we saw the CPI numbers really give a lift. The markets had a good run, but then right back to selling, closing at the lows of the day, and then Friday also closing just off the lows of the day. Another key thing to keep an eye on that I'm watching like a hawk is the NASDAQ composite on the daily. In fact, we'll go to the weekly chart because you can see it more clearly here. The low from COVID right through here. And then here's your high. So this was your bear market low, your COVID low. So your two most major lows in the last 4 years. And then your major high pivot, which was your bull market of 2021 right there. and then this high right up here. Look at how we're just kissing the underbelly of that parallel. By the way, do we think that it's anything abnormal or unique that Bitcoin is also kissing the underbelly of its parallel? I would dare say that those two things are connected as risk assets. Pretty cool stuff, actually, to think about. All right. So we have, again, a market that remains in overbought territory. I have my key cycle date. We've discussed Drew, who's my cycle guy, pro trader in the office. He was focusing in on this December 15th timeframe. All right. So again, the cycle date was technically yesterday. And remember what cycle dates are. They're the beginnings of changes in character. And you could argue that last week's price action, we saw the beginning of that with how the market was reacting, right? So again, just little things like this. We see this small change in character starting to develop. Then you have the cycle date, then you have the holidays. And then once you get into January, that's where, for me, the big money starts coming back to play. And that's where you could see that bigger turn down in the markets, okay? So again, I will continue to monitor that and keep you guys abreast. Next up, let's take a look at a few movers today. SMCI being removed from the S&P, or I should say the NASDAQ 100. This stock is getting tattooed or dropping sharply by about, I think it's down about 12% here pre-market. Closed on Friday over here. By the way, look, the news leaked out here. Even though the news technically came in the after hours on Friday, look, someone knew ahead of time. This is the last candle of Friday. Look at the dump on it right there. And then the news broke right over here in the after hours that SMCI was going to be removed from the NASDAQ 100, and you can see it's continued lower. But the point being is there's always a trading opportunity. Just because something gets removed from an S&P or NASDAQ does not necessarily mean that there's no trades. If we go to our daily chart, this was my key resistance. It bubbled right up against it. Pre-market, it actually hit it right up here. Now we're coming back down as a trading opportunity for me. I'm eyeing very closely this 20. See this high of this candle right here. Let's zoom in. The high of this candle is equal to the close of this. That tells me there's a level there, and that's right at around 29.50, maybe just a little bit above that level. All right, if we were to hit that, I might be day trading it in the Apex Live day trading room. And then same thing right here. There's a gap fill at around 25.80, and then also another one right down here. So this first one for sure, like this one up here, is only a day trade. Probably this one too. This one, I might think about swing trading it right here all the way down to double bottom, accumulating in that range. Because again, the kicker is this, right? Yes, they got removed from the NASDAQ 100. Obviously, there's a lot of ETFs that track the NASDAQ 100 that have to unload the stock because of that, which is why it's down. But assuming they come out with this audit and this kind of restatement of financials, there is value here. There's still a lot of demand for AI and data centers and all this other stuff. And you'd think, assuming there's no fraud or anything shady here, that this at a certain point becomes a buying opportunity. The other thing I love to do here, guys, is I do my Fibonacci, right? We take our fib tool, we drag it right from this low down here, right up to this, and we stretch it out. And then look, right at that first level for a day trade, what's right below there? The 618, right? The 618 Fibonacci. So what that tells me is that there should be added support for a potential day trade right around that 29.50 range, give or take. Now, listen, in all fairness, is the stock at this level yet? No, not even close. It's at 31.80 right here, and it did pre-market get down to about 30.92. But really, it gets through this low, it goes down another dollar or so, you're getting in that range. So as a technical trader, and this is so important, folks, as a technical trader, I have to be planning out my day. Traders that literally walk in and they don't look at a thing ahead of time, they're going to honestly be at a deficit. They're going to have the odds stacked against them because you're not looking ahead of time and getting prepared. You're much more likely to get emotional when you're trading. But if you know your levels ahead of time, you just sit back and say, okay, if it hits my level, no problem. I'll take that trade and I'll take it as an opportunity. All right, let's go back to the charts here. Let me go back to the full screen for you guys. Now, a couple other names getting added. MicroStrategy, MSTR, is being added to the NASDAQ 100, helping replace Super Micro. That stock again was up sharply, partially because Bitcoin was trading at around 106,500 up in the early pre-market. But since then, Bitcoin has started to fade, and so has MicroStrategies. But it's still up as it's getting added to the S&P 500. My only issue with this, and I'm going to show you guys another stock that's being added to the NASDAQ 100. I might be saying S&P. I apologize, but it's the NASDAQ 100. Another stock being added to the NASDAQ 100 is Palantir. And Palantir here, folks, again, this is kind of what I want to draw your attention to is look at the charts on Palantir. Okay, let's just do a measurement here. So in August of 2024, so what is that, about 4 to 5 months ago, the stock was trading there. It as of now, it's up 250%. Okay, if we go to MicroStrategy, MSTR, okay, and we bring this up, let's remove that line there, and we do that same thing. What was it trading in August? August 5th low? It's trading, and this is not including today's gap up, 300% higher. And so my point being is, do you think it's a good idea to add stocks that are up 250 to 300% to a NASDAQ, to the NASDAQ 100 when they're up that high? Or is that putting the NASDAQ at risk that if these were to just have 30, 40% corrections, which would really be your run-of-the-mill pullbacks after a 300% move, would that be a negative for the index? So when I look at this, I almost think to myself, could this be, especially on something like Palantir, could this be something like a blow off top scenario? You have your reversal candle here, which is very, very bearish. This gap up where it reversed and engulfed the previous candle here. And then you've almost made a bear flag here on this chart. And you almost think as the NASDAQ, listen, I don't run the NASDAQ 100. I have no desire to do it. But you almost wonder if they're putting themselves at abnormal risk by adding stocks that are basically trading up 2, 3, 400% to the NASDAQ 100 just before, some sort of natural pullback. Like for me, if it was me, I'd be much more apt to say, okay, let's wait for a 20% correction at least and then add them. But hey, what do I know? That's the key right there. All right. All right. So a couple other things. Those two stocks are moving. One thing on Palantir that I find fascinating is even with this news, the stock is lower on the morning session. But I just want to draw your attention to the last hour of trading on Friday. So this is where the market's closed on Palantir, right here at 4 o'clock on Friday. Look at this run up. Does that tell you something? So someone knew ahead of time they were going to get added to the NASDAQ 100. And I point this stuff out, guys. I point this stuff out because I want to call out the bad actors, right? I mean, I think one of the things that verified investing is all about is evening the playing field between retail investors and the institutional money. And there's things that I see on an intraday basis. For instance, options, right? When I talk to you guys about the scam that is options expiration, where institutions sell most of the options, probably 97% of all options to retail. And then if you notice, just about by the way, we're into options X week this week, but what you'll notice is Thursday into Friday, all of a sudden magically stocks will all, like these big stocks that have a lot of options, they'll all rotate towards a key strike price. And what's going on there is that the institutions are saying, okay, where do we maximize our profit from selling these calls and puts? And they'll be like, okay, well, if we close the stock at $300, right? Let's say it's trading at 305 or 295. If we push it here, we have to spend about $3 million to push it there, or $5 million, or whatever it is, but we'll make $35 million by getting these options to expire worthless, and we keep those premiums, right? Because they're selling. When you buy an option, we're all paying a premium that if it expires worthless, whoever sold that to us makes that money. So there are these little tricks that I always am looking to expose to you guys out there, the retail public, to understand how to not only be aware of them, but potentially avoid them. So for instance, one thing I'll never do is you'll never find me buying a put option or a call option on the final week of expiration with it expiring on that Friday, because you're just basically asking to put the odds of your success totally in the determination of the institution versus letting the natural market behave and do what it wants to do. Okay, back to the charts we go, guys. Let's get right back into it here. So again, we have the NASDAQ up, the S&P up. Super Micro is down on the day. We have Palantir, which was up, now down slightly on being added to the NASDAQ 100. And same thing for MicroStrategy, although MicroStrategy remains up. Now, if we flip over to Bitcoin, guys, we have to look at Bitcoin. So look at this. So Bitcoin pre-market, and listen, it's not pre-market for Bitcoin because it's 24/7. But earlier this morning or last night, my time, Bitcoin pushed up to 106,554. Now, you guys know I've been steadfast on saying this is going to 107 to 108,000. Now it came within less than basically within $450 of my low end target. Is that the target? Is that the high? The answer is, and I don't want to disappoint, but we don't know for sure. Right now, it certainly looks like you got to pull back here, but we won't know for a couple days if that's the high or if it's going to push up one more time into this level and get into this level. And even in all fairness, it could pierce this level. But the point being is that when we look at this parallel, notice how this line is zoning in right on this line as well. So these two lines are meeting together. And if I zoom out on the weekly chart, this bigger parallel from your 2017 high goes right through the two highs of 2021. Notice how it pierced here, but it connects perfectly through that high. That's how I draw that trend line, because you have to do it into that level right there as your first level. All right, then it extends out and it comes right up to that 107 to 108,000 level. So you have those two parallels, this one upsloping and this one less upsloping, and they are joining right there. Now, the price action today, it is intriguing, but I still have to just reserve judgment on whether or not a kiss of the target is the high, or do we go a little bit higher? Now, many people will argue Bitcoin is going to 150,000. I would tend to agree, but it's just a matter of time, right? So I remain a longer term bull on Bitcoin. The question is, do we just ignore the charts and go with emotion and say, hey, it could get there by the end of this year, next year, whatever? Or do we say, okay, well, let's take it one step at a time, make Bitcoin break out and confirm above this level before we jump to that conclusion of saying, oh, well, now it's going to 150, right? So I think the big difference maker is that when we trade using emotion, we tend to ignore the facts, the logic, and the probabilities, and we just say, okay, well, it's going here no matter what. I don't care. It's just that's where it's going. Versus you can still have your longer term viewpoint, but understand that resistance and support plays a role in the near term for having price hit it and pull back, or hit it and bounce off of those levels. All right. So again, watching very closely on Bitcoin here. I can quickly flip over to Ethereum just to give us the latest update on Ethereum. Ethereum, basically, you have your major resistance at 4,100. You can see that double top here. We came up underneath here after hitting it over here and are pulling back. This is your key support, so 3,420. As long as we hold 3,420, then it's basically 50-50. Does it break out or does it break down? All right. If we break 3,450, you then start having a cascade effect to 3,000 here, and then ultimately down here. And then this would be like the major buy level down here if it ever got back here. Now, if we break above 4,100 and we zoom out, guess what? Double top all-time high resistance comes into play at 4,875. Okay, so that's your little update on Ethereum. Let's go to gold real quick here. Gold is getting a small bounce. For those of you that have followed the analysis on gold, I've talked to you guys about how here was your wide range red candle. This was a hugely bearish signal. The bear flag formed, then the bear flag failed, and then it negated the red candle, which was a big flagpole of bearishness. Now, how did it negate it? Well, if you look closely, you closed this candle above the red of this candle. That on a technical basis is significant. It might only be like $2 on gold, but it's actually technically significant. Now, it doesn't mean, oh, we closed above it, we're going to rip higher. No, charts don't work like that. They have 3-bar moves, then you get a little pullback. Notice how we pulled back. Where did we go, folks? Look at this. So on a technical basis, former resistance becomes support, former support becomes resistance. If we draw this apart, look, see all this sideways chop? That now becomes support. So as price comes in here, it gets into that range, it finds a ton of support, buyers will step up, and you get this little move up. Now, it still could come down a little bit more, but the way I view it is this, is that as long as gold does not confirm below this line here, which is this bigger parallel channel, then you remain neutral to bullish on gold. It's stuck inside of a parallel channel, upsloping. If it were to break here, that changes the game. But as long as we stay in this vicinity, I would favor a move to the upside, especially as uncertainty into the next administration kicks in with tariffs and some other potential political type stuff. Okay. Now, silver, if we look at silver here on the chart, bringing that up, there we go. So again, you can see I've already drawn in my expectations here. You have this line, which is parallel to this line, and you've seen price just chop. We came down, we kissed the low end here. You're getting a small bounce. My guess is, and this is again just going off of probability, just please understand, is that again, bear flag, top, right? So here's your flagpole, here's your inside bar. You get small bounces, but then eventually the breakdown occurs. I'm looking to buy at a retrace into this line right here. This would be a major technical level. Okay. And then lastly, oil and natural gas. And then I just want to touch on China, since China had some economic news over the weekend. Oil again did confirm above this trend line. So it has now broken out above this line. What does that mean for probabilities? It means that the upside now takes over as the most likely outcome. Oil is trading down a little bit today, but ultimately I would expect oil to make a move up to about 73.50 to 74, at which point it will run into this major trend line right here. And that will be a stopping point. And it honestly probably is where I look to start to short oil. Natural gas, let's take a quick look on nat gas here. Look at this, guys. Love this trend line here. So again, this trend line pivot low right through here, right through these lows. Notice how it hits once, twice, three times, bounced away. And where did it go? Today, just right back to that line. If this line breaks, there'll be a little bit of technical support at this gap fill right here, which again, if you're more aggressive than me, you could probably play it for a quick bounce. That's right around 277. But for me, notice these trend lines, how they're all starting to converge. So you have this upsloping one and this flat one and this downsloping all in this vicinity. This is where, for me, I see the most convergence of trend lines. Therefore, it offers the best support level should price hit. Now, I know it's a lot lower, but remember, natural gas moves quite substantially. Lastly, just a little update here on China. China had some economic news over the weekend. Their manufacturing data was actually pretty good, but the problem is they also had retail sales data, and their retail sales showed that the consumer in China is really pulling back. And there is again, it's you're seeing a little bit of pocket of positivity, and then the negative of the consumer, which is slowly pulling back there. And so ultimately, we are seeing China stocks are down just a little bit here pre-market. If we go, for instance, to Alibaba, which is a direct retailer in China, we can see that this is actually heading lower after closing around 87.85 on Friday. It's trading around 86. Not a huge drop, but you can see again a pullback. Now, I will say this is that this is one of my favorite chart setups. High to high to high, breaks out, retraces. Look at the bounce it got. Now you want to buy these pullbacks to these levels. So really what we're looking at is anything between 85 and 84 to me gets very interesting for a long opportunity. Oftentimes these can chop around here, but eventually they make that next big move up. The idea being is that China will continue to do stimulus to try to get their consumer spending again. Plus you add in the PMI data and some of this other stuff. And again, an underinvested Chinese market. And it's very likely we could see a big move in January and February. So believe it or not, I know it sounds weird, but I'd be almost more inclined to be short US stocks in January and February and long foreign markets, not just China, by the way. I think there's a lot of underinvestment in a lot of other areas out there, but China certainly is one to watch. All right, guys. So listen, Federal Reserve this week. We have some other earnings like Micron later this week as well. Let's keep an eye on things. We know that the NASDAQ is coming into that parallel resistance level. We know that we also have the S&P, which has just hit that 6,100 level, maybe can get up to around 6,175 from now to Christmas and New Year's. But ultimately, to me, I'm seeing undercurrents, for instance, more declining issues for 10 straight days in the markets than advancing issues. These are weakening signals that are being masked by things like Broadcom's big 24% up move on Friday. This gives us an opportunity to start to be aware that there's a change occurring around this cycle date that likely will lead to significant downside starting in maybe early to mid-January, continuing for a few months. Look for another August type correction, maybe taking a little bit more time than that August one did, but nonetheless, let's keep it on our radar. All right, guys, as always, thank you so much for coming out here and spending time with me. I am going to be on a cruise this week, but I'm going to get you guys your game plans each and every morning. I appreciate you guys tuning in, so I'm going to go to bat for you guys and make sure you get all your information. I'll be here. I'll be monitoring. Thank you so much for tuning in. Take care.